Okay, I now have the pleasure of introducing the next panel discussion, this time on the impact of COVID-19 on digital financial services ecosystem and how to adapt into a post-pandemic world. It gives me great pleasure to introduce my distinguished panelists. The panelists are Harish Natarajan, lead financial sector specialist, finance, competitive and innovation at the World Bank. Then Elizabeth Berthe, partner in Microsave Consulting. Then Mayada El-Zoghbi, CEO of the Center for Financial Inclusion. And Shelley Spencer, payments innovation lead at NetHope and CEO at Strategic Impact Advisors. I think we have all our panelists live. Great, excellent. So we'll start with a regulatory focus, if we could, because that's framed a lot of the responses in DFS to the pandemic. Just very quickly on DFS, because a lot of folks might not know exactly what that is. Sometimes it's known as mobile money. It's a primarily transformative method for improving financial inclusion in the developing world, servicing the poor. As Chris mentioned, primarily using relatively cheap, very basic mobile phones, which have its own security risks, to access financial services to what are called the unbanked. Okay, so we've probably got over 1 billion accounts. I think there was a last set of statistics that was sent out with 290 live services in 95 primarily developing countries. And a lot of the social payments that also known as government-to-person payments. They sent out to recipients mobile phones and often cashed out, not really through ATMs, which are in short supply in the developing world, but rather through individuals, vendors known as cash-in, cash-out agents. So I'm just sketching this terminology that we're going to hear, CISO agents, throughout our discussion. In fact, many people have access to an account for the very first time. And also some access to credit and insurance for the very first time. So as I mentioned, we're going to start with some regulatory focus. Of course, the virus has affected every corner of the world in a short period of time. Regulators and other entities having to adapt and react pretty quickly in relation to cash and services. I'll throw this up probably to Harish, who's best positioned at the World Bank to answer this, if you unmute. From an emerging market perspective, and similarly, how have the policy tools governments have at their disposal been shaped and developed to address the crisis? Can you give us some examples, good and bad, please?
Thank you, Leon. I hope you are able to hear me well. So very clearly, this crisis, of course, kind of motivated quite a bit of shift in the perceptions of the public authorities, and then also in shaping some of the key policy interventions required. And the key driver for this came from the need to kind of very rapidly roll out the social benefit transfers as part of the economic stimulus packages. We have been tracking very closely some of the different interventions coming out, and at last count, over 1,000 different measures were implemented in 195 countries. So that kind of shows you the scale and scope of that. Some of the key elements in the policy reforms were related to how do you onboard individuals kind of in a very rapid fashion. So that kind of brings into fore all the KYC related requirements, simplifying them, and then also being able to do things remotely, because that was also a very big challenge. And this is not just restricted to individuals, but it's also for merchants and also for agents. No? So I think that has been one big area. The second aspect has also been about this whole process of creating a new account for an individual. So not just that identification, but the process of for the individual to register for a program, that information being available to the financial institutions for them to then be able to access it to open the accounts. That's the second area. And the third area has been about mobile money has come with some restrictions always, right? Because of the risk benefit trade-offs. Due to the crisis, some of those limits were revisited. Some of the limits were relaxed to allow for greater usage of mobile money in the given context to support the needs of the time at this point. No, so I think these were the three ones, and then the last one was also about kind of reducing the barriers to use mobile money, so which is in some cases was related to the cost. So some providers voluntarily, and in some countries the government also intervened and required the fees to be reduced significantly, or in some cases actually brought to zero.
Great. Anybody else want to follow up on that? Maybe discuss the long-term implication of any of the emergency measures resulting from COVID that Harish mentioned. Maybe Mayada.
Yeah, let me jump in and just say that we've been CFI is an organization that's been around for 12 years or so, and we've been looking at some of these measures and how they actually impact some of the institutions that already serve low-income consumers. So, of course, mobile money is not available everywhere and is not already accessible to all consumers. But when you look at the institutions that are serving the low-income segments, the MFIs, non-bank financial institutions, and so on, while not all of them have fully digitized and not all of them are yet part of the digital ecosystem, many of them have been making shifts to be participants in that system. And one of the things we're finding is that a lot of the policy measures that governments have been taking have somehow excluded these players altogether, when they could possibly be partners in some of that, some of the getting the cash out the door to low-income people. So we've noticed, and for example, we've been supporting something called the Microfinance Coalition, which is a network of these traditional players that have been around for decades, already serving these customers. And one of the things that they've said is, we're not part of the conversation. We're not brought in to some of these government responses. We could be partners in some of the cash transfer processes. We're currently not looked at all. And we already have the relationship with the consumers. We already have systems to support onboarding if needed, and so on. So that's just one of the things I just like to want to call out.
Elizabeth, Shelley?
Sure. Just adding on to what Harish mentioned, we're also seeing agents, the recognition that agents do play an important role, especially in the transfer of funds. We have a few countries that did declare agents as an essential business, so that they were able to be operational during lockdowns. And as we think about this, we're also seeing some interesting things, for example, with the interest that's gained on trust funds accounts. So for example, in DRC, mobile network operators were allowed to use the interest to help cover some of the gaps. So that's a bit more creative than some of the things that we see initially. And as we start to shift towards more digital, we still have a lot of work to do to get people to actually use these services, because when we're seeing direct benefit transfers, sometimes they're being transferred into inactive accounts. So there's still a lot of work to be done just on the education side.
Shelley?
Yeah, I would add to that we need to keep our eye on inclusivity. I think it was brought up in the Gates conversation. While these social transfer systems, the payments are going to go by cash, not everybody does have an account. So the 1 billion number, right, for mobile money accounts is impressive, but when you look at active accounts, it falls dramatically to like 1 million. So we may have solved some things, but not everybody has an account. And listening just this morning, a lot of the things that Professor Noam mentioned as institutional challenges, I think we have the same things: digital literacy, digital account, digital device ownership, those kind of things you could go through. I was checking off all those same things. So I think we have to be super intentional, and at NetHope, with an organization of 60 plus NGO members, thinking about that last mile. It's good to push payments that way, but we have to invest in making sure that works. And then with cybersecurity, how are we building the capacity at the individual level to manage that? So like the last panel, that internal risk. One of the challenges, and I know Mayada and Elizabeth have seen this, is getting people to remember their PIN for their account. So we have to work on that. And I think that's an important part of the conversation that needs to be there as we continue. Digital is now a necessity. Early on for us, it was a nice to have. Everybody wanted financial inclusion. Now people's lives are depending on it. So super important to think about how they're dealing with that as new customers.
Yeah, absolutely. Following on that theme of the consumer component, there's obviously been a dramatic shift to online services, accounts, active or not. You're quite correct. There's not as many active accounts, but nonetheless a lot of active accounts, and those create sort of a honeypot for bad actors. So there's clearly a need to enhance consumer protection in some way to ensure the safety of financial and other transactions. As Professor Noam mentioned, now we're moving into the area of data protection and privacy, contact tracing, and of course, it being a honeypot, there's a lot of ID fraud happening. So with bad actors trying to intercept government aid, GDP or PPP, it is in the US. Generally speaking, this is open to anyone, what are the primary consumer protection risks arising from the crisis, over and above what I've mentioned, or including what I've mentioned? Shelley, you want to take that? Or?
Sure. I would say that on consumer protection, I think one of the things we've done a lot of work on as a sector and with the thinkers on this great panel is risk proportion. So is it more important for somebody to be able to get the safety net program that enables them to keep their families fed? And how are we doing that risk proportionately? So one of the challenges, particularly, and also Chris from Gates brought this up, for our sector has been the gender gap. And identity is a huge issue there. It's not the identity theft, it's having an identity card to get that account. So how do we balance that? But then I also think, and Elizabeth could speak to this, the agents being the last mile distributors play an important role. We found that trust for women in particular to use accounts is important. So who is that local agent that you can go to help problem solve, and how are they helping you figure out the consumer protection? And how are we creating those consumer protection loops so it's easy for people who are new to services figure out how to do that? How do you know how to call a customer service line if you've never really used a service before? So, Mayada, I know you probably have thinking on this area as well.
Elizabeth, you want to take that?
So yeah, in addition to just thinking about those elements, as we mentioned, we still have like a lot of basic areas where we still need to hit. Due to low education levels, low literacy, low digital literacy, as we shift these channels, even access to smartphones and things like that, we still have to think about how are we going to service these areas, the low-income populations fairly. I think also when we think about data protection today, we don't have a lot of regulations in place. So basically they're contractual. So it's whatever, if I'm a microfinance institution working with a fintech, it's whatever my knowledge that I have today to put into that to help protect the client. And that's not enough today because we don't know enough about this space to rely on it at that level. So we need more data protection measures. I think we've seen, we can't underestimate for low-income populations their understanding and need for privacy as well. And so on the education side, they don't understand, well, we're going to start to see more digital credit and things like this. So helping these individuals understand moving forward, okay, what happens if I give access to this data? How does it impact me moving forward? We have seen some positive trends. CGAP recently did some surveys testing loans and offering loans at different rates depending on the privacy levels. And so it was encouraging at this level to see people opting to pay higher for privacy. But we need to do more in the background to ensure that the consumer protections is in place for low-income individuals.
Leon, let me jump in here as well, because so obviously CFI has been working on consumer protection for over a decade, and we created this community around trying to solve some of these issues. We in the early days, it was more focused on traditional players, and obviously it's increasingly shifting to digital players. We believe the COVID situation has heightened some of the risks that we'd already observed, with traditional finance or inclusive finance. And I think it's come up a little bit around, as more consumers who have never been on digital platforms now all of a sudden being asked to understand how these things operate, have agency to even know that they can ask questions, have agency to even raise a concern or know where to call if they have a problem. So some of these things are really heightened today as we digitize government transfers as quickly as they've been digitized. So there's a huge need for our community of players to start to think about, well, what does this mean for the consumers? How do we get people up to speed quickly? In light of the fact that we can't rely on traditional means of face-to-face training, face-to-face ways of engaging with consumers. So anyway, one of the things I want to say is that at CFI, we really want to prioritize unpacking and understanding some of the new risks that are emerging. Data is clearly a huge one. How is data being used? What's it being used for? Do people even understand how their data is being used? Are they even consenting? Do they even understand what they're consenting to? All of these things are major issues. They've been around a while, but they're heightened now under COVID.
Harish?
Yes, Leon, kind of in addition to, of course, what all the other colleagues have mentioned in terms of data protection, cyber, and so on, I just want to highlight maybe two additional aspects related to the cyber and then fraud risk in general. I think we have seen during this crisis the social engineering attacks becoming more pervasive. And given that many of the kind of beneficiaries and many of the individuals are coming onto digital payments for the first time, and I think they are particularly vulnerable to that. And I think whatever we can do for addressing that is very, very important. One area which was very significantly highlighted is the question of operational reliability, right? So very often the systems, kind of the notion of operational reliability is of course very central to risk management from an IT systems perspective. And very often it is focused more on kind of having a backup system, having a disaster recovery site, and so on. But the people aspect of that was highlighted very significantly during this crisis. So it's not just about being able to move your operations, but you also need to be able to have people move. People have the right people with the right skills, be able to kind of immediately bring up the services from a different location. So all of those were challenged because of the crisis, given it was so pervasive, and it also impacted people's movement. So I think that is something which got highlighted very significantly, and that is something which has to be looked at. And related to the points which was made earlier about the agents becoming very critical, and agents were declared as essential services, that also revealed a few other issues, right? Because the agents by themselves are relying on liquidity they generate from their core business, right? So they are basically recycling the money they make from a shop front to be able to meet the cash out needs. If the main business is impacted because of the crisis, then their liquidity kind of ability to serve the customers is also impacted. So I think the liquidity aspects related to the agent networks is also something which was highlighted during this crisis. So it is operational reliability, not just from the systems perspective, but also people and also issues related to liquidity is something which perhaps needs more attention. Thank you.
Okay, that's thanks, Harish. That's actually a good segue into the next discussion point on how these cash disbursements and electronic disbursements have occurred. Clearly, it hasn't gone smoothly. It's unfortunately or fortunately, in some cases, the technology has worked. In other cases, not. There's been unexpected technical and logistical issues, found some weak points. Just generally, let's talk about the fintech components and innovation. How fintech companies help or hindered approaches to providing these secure and innovative services for disbursements and access to new products and services. Mayada, Shelley?
We're actually seeing some interesting things from our teams in Africa. So in Uganda, one of the interesting things is how people are moving to doing digital transactions, not because it's a financial service, but because they need to continue to sell their products. So if we think about markets that were locked down in Uganda, how were people getting paid? And our team was saying people would put pictures of their produce on WhatsApp, and then somebody would order on WhatsApp, and then they would do the transaction with mobile money when they dropped it at their door. So I think it was interesting, a conversation we were having a couple of weeks ago with a group of leaders in the space, and they were saying, you know, people are finding workarounds. They're doing digital discovery. How do I participate now and keep my economic livelihood? And then I'll figure out the payment piece. So before we would say, let's push the payment piece, and early theories where payments will drive use of these accounts. Now people are finding, okay, in order to be able to do what I do, earn my income if I'm selling tomatoes in a market, I'm going to have to figure this piece out. So I think it's interesting that users might be finding the solutions first, and then we'll find the answer to your question, Leon. It might not be the fintechs pushing it down. It might be, okay, you know what, we're going to go to Facebook, we're going to go to WeChat, we're going to go to WhatsApp, because we know how to use that, and we're going to use it. That's
a great optic. Thank you. Thank you for deducing that. But generally, this is open to others. How have you seen the role of innovation, be it from the consumer side, from the fintech side, from the government side, evolved as a result of this pandemic?
Let me just jump in. So we have a team inside CFI, The Mix. We just absorbed them a couple months ago, and they've been doing tracking how fintechs have been responding and dealing under COVID. And so our focus is on inclusive fintechs, so not necessarily the big players. But what you're finding is a lot of these players are actually struggling from a cash perspective. So a lot of them are trying to preserve their cash as much as possible because they're having a hard time fundraising. Many of them were poised to bring in new equity investors, and COVID has basically put a standstill on a lot of the fundraising efforts that these institutions were in the process of. A lot of the issues on the investor side is, of course, it's very hard to do due diligence on an entity that you don't know. And so you're seeing that a lot of the investment flow that would have normally covered the growth, the potential for these fintechs to grow, has actually slowed down. So the investors are investing in their existing partners, their existing players. So the more mature fintechs are the ones that are benefiting. But some of the more innovative, potentially smaller players are not attracting that capital just yet. So some of them have a few months of cash to continue, so they just stabilize, but not a lot of growth. I want to just echo what Shelley just said. Is one of the things we're seeing from the consumer lens perspective is that you are seeing the micro and small enterprises that were on digital platforms. So if we have the big tent definition of fintech, like that's where those are the ones where you're seeing solutions happening. More people are getting onto the e-commerce platforms as a way to just do basic commerce, right? And so that one of the things that we've been thinking about is, as these traditional, as these smaller players that may have had the potential to serve our segments, they might get eaten up by the current liquidity issues happening in the sector, and you could potentially start to see a lot of consolidation with the big platform players eating up some of the smaller players, given the fact that they've got the cash. They're able to onboard people maybe slightly more easily because they've got the cash to do it. So these are just some of the things that we've been thinking about in our space.
Has there been a lot of PPPs emerging, private-public partnerships between governments and fintechs to solve these problems?
So we've got a few examples in Kenya of that happening. There's a company called CITI, I think it is. And so they've been working with Give Directly and other NGOs and entities to bring in funding to help cover the gap where informal workers don't have an income at this time. So for example, they're doing cash transfers. For example, with youth of like $30 a month over a period of 3 months. So we're seeing that start to happen. Some other interesting things, just like Shelley mentioned. So we are seeing a lot of entities just trying to figure it out on their own and shifting towards using social media to figure out how to cover some of their gaps. Government regulators, it really depends on their viewpoint of the fintech space and how they can work with them. So there are some constraints of where they feel that fintech shouldn't be playing a role in this space, so that limits what one can do. But we have a few governments that we've seen, for example, develop e-commerce platforms. They're realizing that, for example, MSMEs who are going to survive are generally the ones who have digital competence, whether it be figuring out how to work with social media or actually being linked to payment aggregators or other entities. So, for example, in Senegal, they've created a platform that only has about 60 users, I think, right now, but dedicated to MSMEs so that they can have digital payments and have access to a larger market. I think we saw with the lockdowns that it was really a struggle for entities who counted on working across markets, and then they were limited to a much smaller market. So in order to serve those, they needed digital channels. India as well has done some good jobs on working on platforms. And we see fintechs now coming in the background to figure out, okay, how do I leverage data on those platforms to then offer credit services? So it's slowly moving, but as we mentioned earlier, lots of work to do to ensure that we don't create greater problems as we offer more credit digitally.
Yeah, quite correct. You don't want people going instantly onto blacklist, credit blacklist, if they just can't handle this inflow of credit that's offered to them. But Mayada, CFI has done quite a bit of work with MFIs and the like. Have you seen a general change in the mix of credit and maybe also insurance that's been offered as a result of the crisis?
Well, so one of the liquidity theme that we've came up earlier, one of the issues we're seeing is that a lot of MFIs are actually they're trying to respond, but because of moratoria, because of they're not able to access some of the national liquidity facilities that have been opened up by central banks, that you're finding some of these MFIs are unable to extend credit. Actually, a lot of them have frozen operations. And so that's a major issue. One of the things that we've been talking about is how some of these facilities that have been established either by the development finance institutions or by national governments, they really need to be opened up and accessible to all the players serving the low-income segments. But currently, a lot of MFIs are on a holding pattern. In terms of insurance, I think that there have been a few things that have emerged, not necessarily from the microfinance players themselves. A few fintechs have entered in the, COVID insurance space, but it's not an area that there's been. We're not seeing kind of volumes in the insurance space yet. We're hoping that this crisis will teach our industry the need to prioritize insurance in a much bigger way than we have thus far.
Thanks. Harish, from your perspective, what have you seen regulators embracing insofar as enhancing liquidity and maybe tripwires for credit or overextension? You're on mute.
Yes. No, I think so there have been, of course, a number of credit-related stimulus packages from governments across the world. And there have also been some amount of regulatory forbearance and things like that. So, in terms of the government policies on the fintech side, I think the general effort because of this crisis has now been to recognize the positive role that fintechs can play, and this is also seen in the role fintechs have played in distributing the credit stimulus in a number of countries. So I think that's been one of the things we are seeing. There, of course, have been a few countries where the governments have directed some amount of liquidity support to support certain sectors, including in a few countries to create some funds for fintech companies in particular.
Thanks. Shelley?
Yeah, I think Microsave actually did some really interesting work in Indonesia that I would recommend on kind of what is happening to the fintech sector there. So similar to what Mayada was saying, it's struggling with financing. But I think as, some people capture, like IMF would capture even mobile money as fintech, right? And they have a new digital financial inclusion index. But one thing I think to think about also in terms of long-term, some of these regulatory measures, I'm interested in the panelists' thoughts, like waiving the fees, what do they do to the business model? Because the way these services are being provided, whether it's a fintech or it's a mobile money provider, they're transaction revenue companies. So if that becomes a long-term thing, someone has to pay for that. And I'm not sure governments realize that. So we can have governments take up that fee or somebody, but the people we're trying to reach, for them to pay the fee can be hard. But those mobile money agents that everybody's talked about, their liquidity, their business depends on those fees. So how do we think through that model, and what are the support mechanisms to keep a fintech, to keep someone who's transaction-based in business in a time when people are struggling and maybe the main cash flow is remittances or it's government transfers? So I'd be interested in other people's thoughts on that.
Yeah, Elizabeth, do you want to pick up on that, especially from the Asian perspective?
We're currently doing several consecutive studies right now in about 18 countries, and so on our agent studies, we're seeing this is a challenge because a lot of agents don't have, well, they didn't have a backup plan and they had limited cash. So depending on the country, like they're trying to figure out, okay, what else can I sell? They're also prioritizing certain channels where the cash, they're reimbursed more quickly. In India, for example, we've seen, again, the necessity of these channels because they're serving a great role. But we're seeing the government actually put in some incentives. It's not being used across the board, but for example, there's fees to help cover to have safety measures in place, like buying sanitizer and things like that. There's also, they're helping cover, for example, the trip to rebalance the funds to go back and forth to the bank, but that's not sufficient. And unfortunately, the agents haven't thought about how other channels. And this is why we see this importance of where we see cash distributions, thinking about how to leverage those channels. So I think one positive thing that's come out of this, especially for the agent networks, is where the agent channels have been used, we've seen this ability to how to really leverage these channels. And it's also helped banks see how important these channels are. For example, in India, there's 160 million clients just in banking halls, just withdrawing amounts of under $5. So shifting that to agents helps reduce the number of people in banking halls, which that's been an aim for always, but now especially with COVID, even more important to reduce people standing in queues and things like this. And also thinking if we can get more banking agents to use these, more governments to use digital payments. We have seen an uptake in cash transfers, but this is limited because it's been systems put in place just for a certain period of time. We have to think about how we can use this even longer. And all of these entities shouldn't think about, I mean, in a COVID period, it's not the time to start building things from scratch. So how do we use these existing channels and leverage them to be able to send out more payments?
Yeah, thanks, Elizabeth. I mean, you touch on a great point on expanding access, and something that Chris Calabria mentioned right at the beginning. Harish, I didn't think you were on then, but he spoke about interoperability between systems and the lack thereof. I know, Elizabeth, you said there's not time to experiment, but certainly the rails for interoperability are there. They just need to, the light just needs to be switched on, so to speak, as best as they can.
DRC has a great example of that because their platform from the central bank hasn't been opened yet, but they actually said, okay, well, let's make our systems interoperable in the interim.
Harish, what are you seeing on that front? What are moves towards interoperability, just blatantly or not?
No, I think very clearly, as the other colleagues mentioned, kind of doing something, creating a new system or service at this point is always going to be difficult. But in terms of the direction, I think very clearly there's a bigger impetus towards that now. And people are realizing across the different stakeholders the importance of this in expanding the networks, in making it more convenient for customers, and in offering more opportunities. So I think in that sense, it's just becoming a core part of the reform initiatives of governments going forward. And in attention towards the end-to-end process, right? So starting from enrollment onwards to disbursement, and also not stopping at that, but also to make it interoperable for payments as well.
And agent interoperability.
And the agent level as well, in terms of cashing out, and then also being able to avail certain services from the agents of another provider, and also being able to use it across different merchant locations and so on.
Yeah. Mayada or Shelley?
I actually wanted to go back to an earlier conversation, if you don't mind, because Shelley raised a really important question, I thought, which is, how do we think about when we remove these transaction fees, how do we think about these business models? And I just thought that was something worth thinking about a little bit more. And I wanted to just point out that in the olden days, microfinance institutions, when emergencies or crises hit, when they stepped up services and tried to be supportive of customers, it was temporary, but then they often actually created loyalty and businesses, and they actually succeeded in the long term because of that. So I see that as a potential lesson for the current set of players today, which is, while we could have a temporary kind of cancellation of fees, there could be a long-term gain from the business model, from a business model perspective, in the sense of secure loyalty of the customer, expand the customer base. And then this is just another thing that I think it is worth mentioning. I mean, donors are supporting a lot of these activities, and there is space for subsidy, and there is space to help actually fund some of these things. So this could be an area where donors can step in and help, take on some of these costs, or potentially governments themselves can do that as well.
Shelley?
Yeah, great. And I think on interoperability, it's interesting how things have evolved. So when we first started in this, nobody wanted to talk about interoperability, right, in 2011, 2012. Now GSMA has a whole platform you can use for interoperability. And so they've launched that and kind of pushing it. So I would say maybe governments could be, we've seen some good examples, right? DRC, Tanzania, other places tends to be competitive markets where there's not a dominant player and there's benefit to the whole sector in interoperating. But if they set a timeline and said, this is where we're going, do some signaling that we're going to go to interoperability, maybe that could move the needle along the way so people can plan for it. But I think a lot of it's industry resistance. So I got my market share. We saw DFS early on, people, especially the mobile money operators, saw it as a churn thing. People won't leave me if they have used my mobile wallet. And so we have to get away from that mentality. And we've gotten there in other places in telecom, right, as was mentioned this morning. So I think we can get there, but maybe setting a marker would be helpful.
Yeah, thanks for that reference to Tanzania. I was actually part of the small team that developed the interoperability there back in, we started I think 2014. But as you said, it was quite a flat market structure with not necessarily one dominant player. And I've done interoperability in various other countries where it's been a little bit more challenging, but we've got there. So there is a market players do see a need, and in some cases the regulators have to give a bit of a nudge to, not necessarily a mandate to interoperate, but certainly a nudge to get everybody around the table. So yeah, that's been a success, I think, and certainly expanded DFS and access to finance around the world. Harish, any points, final points on that? I saw you moving or not? No, okay. Oh.
Yes. No points on that. No, kind of just to note that I think interoperability as a concept, of course, has been talked about for a long time. I think while we talk about interoperability between the mobile money providers, one also needs to see about interoperability between the mobile money and the broader financial system. And in particular, if you want to use mobile money for receiving salaries and government benefit transfers and so on. So one needs to connect also the existing financial sector infrastructure with new infrastructure being put up for mobile money. So I think that was the point I wanted to make. And then also interoperability requires standardization in a number of things, like, for example, on the QR code side, and also at the agent level processes, there has to be some standardization. So it's not just the infrastructure, there is business model issues, there are also standardization topics to be looked at.
Right. Onto issues of innovation and inclusivity and gender balance. This is an open question to the panel. How are you seeing demands for more equitable growth effective emerging markets, especially on facilitating gender equality, which is obviously a challenge in most markets. Anybody want to take it? Elizabeth? You're on mute.
Oh, sorry, I was going to let Shelley jump in first.
Okay. Shelley?
I just say it's still a problem. I wish it wasn't. It's gender gap hasn't moved globally, right? And so some countries are doing better than others, but it personally is painful to see that we haven't solved this yet. So I think some interesting data points with, there's a new report out, I think it's Gates, Better Than Cash and others, looking specifically at COVID-19 and the gender gap, and with suggestions of what we could do and how we could use this as an opportunity. You know, in India, they make great progress in getting women to have accounts and on closing the gender gap in financial inclusion. But then there's a study that's saying using certain accounts and doing the social transfers, 50% of the women were excluded. So it pains me that we're still here. And I just think we have to be super intentional. We have to use a gender lens in what we do. We have to target it. We have to make it important. And I think this is the opportunity. This is the opportunity where people want to send these cash transfers to women because their theory is they will use it for their family. So let's do it. That's what I'm ready. Let's do the work.
Yeah, you mentioned a study. I think it was just out on blogs.worldbank.org. Yeah. Jamie Zimmerman of the
yes,
Foundation
exactly.
just
Great read.
tweeted that. I think that's what you're mentioning.
Yeah.
Mayada, Elizabeth?
We just did a study on 6 countries looking at fintechs and how many inclusive fintechs and understanding how many actually address the gender issue. I think one of our challenges is, yes, we have to be intentional. When we look at who are running fintechs and things like that, it's generally male dominated. And so helping this sector think about, okay, who could you potentially serve? Who is underserved, especially for inclusive fintechs? Because when we think about agriculture for MSMEs and things like that, it's strongly filled by women. Women are more impacted by COVID just because they are primarily informal workers. So unless we're intentional about this, we're going to continue to drive this. And we already have fewer women have access to smartphones, so they're limited in the technology that they can use. We still have our issues on phone ownership and things like this, and it might be a shared phone. So they're already starting from a base that it's more challenging to serve them. But again, we have to be intentional if we want to actually reach that market. And because of the potential, just like Shelley mentioned, there's opportunities for all types of different services to help serve them. But we have to get them included, and we have to be developing products and services that are relevant to them so that we continue to get ongoing usage. Because even with transfers and things like that, it's instant withdrawal. So there's not products and services by financial institutions today to help me understand, well, why should I keep it in the system, or what else can I do with these funds? So we have to get better product development and geared towards not only just women, but youth as well. When we look at how many youth are coming, are going to be the majority of most populations, we have to rethink this. And this is a great opportunity right now with COVID, especially to think about youth as well. And how we address that market.
Yeah, just to echo what everyone has been saying, and I think COVID is actually the potential to increase the gap between men and women is much bigger, in the sense that more women are impacted by COVID. They work in healthcare. There's going to be more infections. The kinds of industries that they operate in, the informal sector that they operate in, service industries are more impacted. So the risks are massive for women. And so unless we do the solutions targeted to women, like the cash transfers, I do think we're at risk of actually creating a bigger gap than already exists.
Harish?
No, I echo all what other colleagues have mentioned. There have been a few countries which have now started to direct explicitly the benefit transfers and stimulus to women, and I think what we have to ensure is that the divide we see in other areas in terms of access to ID, for example, or access to telecom services, they do not become the barriers to kind of access to economic stimulus. No? So I think we have to see how we can address that.
Shelley, last word on the gender aspects?
Well, it took 100 years to get women the right to vote in this country. Let's not take 100 years for this.
Okay. Thanks. And thanks, Elizabeth, for bringing up the youth aspect too. That's in a lot of countries, the youth are a majority of the population, so it's an important focus area. It's gone quickly, and believe it or not, we're out of time, unfortunately. Thanks to my superb panel for giving their expertise and their time and providing a most extraordinary discussion, highlighting the challenges ahead, sort of our new normal, and how to really adapt in a post-pandemic world. I'm very encouraged by what I've heard. There's a lot of innovation that will be the new normal and hopefully provide a great pathway for post-pandemic recovery. So again, thank you very much to everybody.
Thank you.